Tech giants plan $344 billion spending spree amid tariff worries. Major technology companies are dramatically increasing their capital expenditure plans for 2025, with industry analysts suggesting this massive AI infrastructure spending surge may help offset broader economic pressures from President Trump's new tariff regime. Amazon, Apple, Google, Microsoft, and Meta have all raised their capex guidance, collectively projecting over $344 billion in spending this year, more than triple their investment levels from a decade ago. Amazon reported strong Q2 earnings with $167.7 billion in sales, beating expectations despite a 7% stock decline driven by weaker profit guidance. The company spent $31.4 billion in capital expenditures in the second quarter alone, putting it on track to exceed $118 billion for the full year as it built AI infrastructure and data centers. Tech giants doubled down on AI infrastructure. Microsoft plans to spend over $88 billion in 2025, with CFO Amy Hood emphasizing the need to execute at their very best to get the capacity in place as quickly and effectively as they can. Meta raised its capex forecast to between $66 and $72 billion, while Alphabet increased its guidance to $85 billion, up 43% year over year. Even typically conservative Apple has joined what analysts call the AI crazy train, with CEO Tim Cook attributing a nearly 50% jump in capital spending to AI investments, including data centers. The spending surge reflects what Bloomberg intelligence analyst Mandeep Singh describes as a tripling of cloud capex investment due to AI. Companies are racing to secure computing capacity amid GPU shortages and power constraints that AWS CEO Andy Jassy admits are currently limiting Amazon's ability to fully monetize its AI offerings. Cushioning tariff impact through strategic investment. Industry experts believe this unprecedented capital deployment could help mitigate economic headwinds from Trump's tariff policies. Quote, "These mega-cap tech companies haven't just powered the S&P 500's rebound," wrote Larry Adam, CIO of Raymond James. "They've also helped offset the drag from tariffs and tight Fed policy through massive capital spending." The tariff environment has created significant challenges for tech companies, with Apple facing potential $900 million in costs and Amazon modeling a 145% China tariff impact. However, analysts suggest the sector's massive infrastructure investments are creating jobs and maintaining market stability despite trade tensions. Amazon CEO Andy Jassy noted that tariffs haven't significantly impacted business operations so far in 2025, citing resilient consumer demand evidenced by strong Prime Day sales. The company's 2 million third-party sellers provide pricing flexibility that helps navigate cost pressures, though Jassy acknowledged uncertainty about who's going to end up absorbing the higher costs. While investors have shown resilience to the substantial spending increases, with Microsoft briefly hitting $4 trillion in market value and Meta shares climbing 11%, concerns remain about the sustainability of such massive capital deployment. UBS analysts now expect global AI capex spending to reach $480 billion by 2026, highlighting the industry's commitment to this technological transformation despite economic uncertainties.